stop what you're doing. Because right now, on the morning of March 9th, 2026, the global financial system is being hit by something that hasn't happened since 2022. And if you own VTI, if you own any stock in your 401k or brokerage account, you need to understand what is happening today and exactly what it means for your money. Oil just blew past $114 a barrel. Some reports say it briefly touched $120 overnight. The Dow Futures are down over 500 points this morning. The S&P 500 is dropping. The NASDAQ is sliding. And every single major market around the world, Europe, Asia, the US, is flashing red. The cause? A war. A real escalating war in the Middle East. The US-Israel conflict with Iran that is now threatening to cut off one of the most important oil shipping routes on the planet. And here's the thing, most people aren't talking about yet. This isn't just an energy problem. This is your stock market problem. And today, we're going to break down exactly what this means for VTI, the Vanguard Total Stock Market ETF, one of the most popular investments in America. I'm going to give you the complete picture, the current numbers, the key levels to watch, what Wall Street is saying, and most importantly, what you should do right now. So take a breath. Let's get into it. Let's start with the facts, because facts matter more than fear right now. The US-Israel military conflict with Iran began escalating in late February 2026. Since the conflict started, oil prices have surged by more than 25%. And this morning, Brent Crude, the global benchmark, has topped $114 a barrel for the first time since 2022. At certain points overnight, it briefly touched $120 a barrel. Now, why does oil going up hurt the stock market? Great question. Because this is where a lot of people get confused. When oil prices spike this fast, it creates what economists call stagflation fear, a nightmare combination of rising inflation and slowing economic growth at the same time. Here's how it works. Oil goes up, gas prices go up, everything that requires shipping, manufacturing, and energy goes up. Companies' profit margins get squeezed, consumers have less money to spend. The Federal Reserve faces a brutal choice: raise rates to fight inflation or cut rates to fight the slowdown, and there is no easy answer. This is exactly why we're seeing the markets respond the way they are today. As of this morning, S&P 500 futures fell roughly 1.1%. NASDAQ 100 futures slipped about 1.1%. Dow Jones futures tumbled nearly 500 points. VTI is down 0.84% in pre-market trading, sitting around 328. The last close for VTI was $331.41, and over the past 5 trading days, VTI has fallen 1.45%. Year to date, VTI is now down 1.15%. Okay, let's talk specifically about VTI, because there are millions of Americans who own this ETF in their 401k, their Roth IRA, their taxable brokerage accounts, and I want to make sure you understand exactly what you own. VTI is the Vanguard Total Stock Market ETF. It tracks the CRSP US Total Market Index, which means it holds essentially every publicly traded US company. Large caps, mid caps, small caps, micro caps, all in one single fund. Right now, VTI holds 3,468 individual stocks with a total asset value of $586.72 billion. That makes it one of the largest ETFs in the entire world. The expense ratio is just 0.03%, meaning for every $10,000 you invest, you pay only $3 a year in fees. That is almost nothing. It's one of the reasons VTI is so beloved by long-term investors. Now, here are VTI's top holdings as of today. NVIDIA, 6.60%. Apple, 5.74%. Microsoft, 4.78%. Amazon, 3.44%. Alphabet, 2.94%. Here's what this tells you. VTI is cap-weighted, which means the biggest companies by market value have the biggest influence on VTI's price. And right now, every single one of those top companies is under pressure. NVIDIA, which is VTI's largest single holding, has a market cap near $432 trillion. Any significant move in NVDA directly moves VTI. Apple is next. And together, just these 5 companies represent nearly 24% of VTI's entire value. So when tech sells off, VTI gets hit hard, and that's exactly what we've been seeing over the past week. Now let's look at what the charts are telling us, and I'm going to keep this simple and clear. VTI's current pre-market price is approximately $328. Here are the key levels you need to watch. Resistance levels. 339 area. This is the 50-day moving average. VTI has been trading below this level recently, which is a warning sign. For VTI to recover, it needs to reclaim this zone. $344, the next level of overhead resistance. Support levels, $334, $335, the lower Bollinger Band. This is the first line of defense. $329, $328, where VTI is trading this morning in pre-market. This is a critical test. $322, the 200-day moving average. This is the big one. If VTI breaks below here, it signals a much more serious downturn. Now let's look at the indicators. RSI, 38.08. This is approaching oversold territory. Anything below 40 starts to look potentially attractive for long-term buyers. MACD, negative momentum is currently bearish. MFI, 27.55. This is very low, indicating that buying pressure is weak right now. ADX, 19.19. This tells us the trend strength is low, meaning we don't have a strong trend in either direction. The market is choppy. What does this all mean? VTI is currently in a vulnerable zone. If oil prices continue to surge and macro fears increase, a test of the 200-day moving average at 322 is absolutely possible. But if oil calms down and we get some positive news, a bounce back toward 334, 339 could happen quickly. The AI price forecast from Mecca gives a one-month target of 307.61, but a one-year target of 342.47. This reflects short-term pain, long-term patience, and from tip ranks, the street's average price target for VTI is 411.46, which implies a stunning 24% upside from current levels if you look out far enough. VTI is currently rated a moderate buy. Let's zoom out and talk about the bigger picture, because the Iran situation is what's really driving everything right now. The US-Israel military conflict with Iran is creating one of the most serious supply disruptions in global energy markets in years. Here's the key geography. Iran sits right next to the Strait of Hormuz, the narrow waterway through which roughly 20% of the world's oil supply passes. When that shipping lane gets threatened, oil prices don't just go up, they explode, and that's exactly what we're seeing. Crude oil has spiked more than 25% since the conflict began. The Iran war has already led to the suspension of nearly 1/5 of global crude oil and natural gas supply, according to energy analysts. Jim Cramer on CNBC warned this weekend that war disruptions could send oil to $150 to even $200 a barrel in a worst-case scenario. Goldman Sachs Oil Research suggests the stock market is currently pricing the Iran conflict as lasting roughly 4 weeks. But if it drags on longer, the market hasn't fully priced in that outcome yet. Now here's the knock-on effect you need to understand. High oil equals higher inflation. Higher inflation equals higher interest rates. Higher interest rates equal lower stock valuations. That's the chain, and it hits VTI from multiple directions simultaneously. Consumer spending drops as gas prices rise, hurting retail stocks in VTI. Corporate profit margins shrink as energy costs rise, hurting every sector. Bond yields spike, making stocks relatively less attractive. The Federal Reserve is trapped. It can't easily cut rates if inflation is surging. Meanwhile, defense stocks are surging. Lockheed Martin is continuing its climb. European NATO countries are diversifying away from U.S. weapons, fueling European defense stocks. GE Aerospace just announced a $1 billion investment in aircraft engines. Defense ETFs like ITA and XR are among the market's best performers right now. This is a tale of two markets. Defense and energy are up. Everything else is getting crushed. Let me rapid fire through some of the other big market stories you need to know about today, because they all connect back to the broader picture. Micron Technology, an analyst from Alethea Capital, just raised his price target on Micron from $315 all the way to $650, a massive increase. His reasoning is surging demand for AI training infrastructure. Live Nation reached a settlement with the DOJ, avoiding the threatened breakup of Ticketmaster. The stock jumped on the news. Talkspace surged after Universal Health Services announced an acquisition valued at $835 million. Microsoft announced a new enterprise bundle tied to Anthropic's AI, a direct shot at Google and OpenAI as the AI wars intensify. NASDAQ announced plans to tokenize shares in partnership with the crypto exchange Kraken, signaling a possible future where stock trading happens on blockchain infrastructure. Okay, now for the part you've been waiting for. What should you actually do if you own VTI right now? First, take a breath. Think about why you own VTI in the first place. VTI has produced a compound annual return of roughly 9.2% since it was established in 2001. It turned $10,000 into $38,000 over the last decade alone, through the financial crisis, through COVID, through wars and recessions, and over time, it has continued climbing. That doesn't mean it's easy to hold through scary moments like today, but here's a practical framework. If you're a long-term investor with a horizon of 5 years or more, moments like this historically become opportunities. When indicators approach oversold levels and price tests major support zones, those are often the best long-term accumulation periods. Dollar cost averaging, buying a fixed dollar amount at regular intervals, is a powerful strategy in volatile markets. The key price levels to watch right now are $334, $328, $329, and the critical 200-day moving average around $322. If VTI falls toward 307, that aligns with the short-term downside scenario suggested by AI forecasts. The long-term bull case remains strong. The street's average price target of 411.46 implies about 24% upside from current levels. VTI has also attracted roughly $846 million in net inflows over the past 5 days. Even as prices fall, capital is still flowing into the fund. If you have cash available, consider keeping some reserves. If VTI tests the 200-day moving average, that could represent a stronger buying opportunity. Stagger entries instead of committing everything at once. If volatility is causing stress, it may help to balance risk with short-duration treasury instruments, money market funds, or cash equivalents until the macro environment stabilizes. What you should not do is panic sell into market fear. Selling during volatility often locks in losses and causes investors to miss the recovery that historically follows. Here are the catalysts that will move VTI in the coming days and weeks. Oil prices and the Iran war timeline are the biggest drivers right now. If ceasefire discussions begin or oil falls back below $100, markets could rally quickly. AI earnings and technology sector guidance remain another major driver. Artificial intelligence continues to be one of the biggest growth engines in the market. Federal Reserve communication will also matter enormously. Any signals about interest rates or inflation policy could shift sentiment quickly. Inflation data in the coming weeks will be critical. If CPI or PPI comes in hotter than expected due to higher energy prices, the market could face additional pressure. Geopolitical developments in Iran will also influence the outlook significantly. Here's the big picture I want you to remember. The world feels scary right now. Oil above $114, markets dropping, war headlines everywhere. It's understandable to feel nervous, but every generation of investors has faced moments like this. The ones who stayed disciplined, kept investing systematically, and focused on long-term strategy are the ones who built lasting wealth. VTI owns thousands of companies across the entire United States economy. The economy has endured wars, crises, and recessions before, and it has historically recovered and grown stronger. Watch the key levels. Stay disciplined. Focus on the long term. If you found this helpful, hit the like button and subscribe for future market updates. Drop your questions in the comments and stay informed as the market evolves. Disclaimer: this video is intended for educational and informational purposes only and does not constitute financial, investment, tax, or legal advice. All figures and data referenced are sourced from publicly available information as of March 9, 2026. Past performance of any investment does not guarantee future results. Investing in securities involves risk, including the potential loss of principal. The Vanguard Total Stock Market ETF and other securities mentioned are referenced for informational purposes only and should not be considered buy or sell recommendations. Always consult a qualified financial professional before making investment decisions.